Hey there, investors and market watchers. Imagine a roller coaster ride where the stock market plunges on a wild Friday, only to rocket back up on Monday like nothing happened. That's the thrilling drama we're seeing right now, with stock futures barely budging overnight after a massive comeback day on Wall Street. It's enough to make your head spin, isn't it? But stick around, because this bounce back holds clues about bigger economic forces at play, and trust me, you won't want to miss the twists ahead. Picture this. Traders buzzing on the floor of the New York Stock Exchange, screens glowing with the latest data on a crisp April morning in 2025. That's the backdrop as we dive into the details. Overnight on Monday, stock futures showed hardly any movement, steadying after a triumphant trading session where the major indices reclaimed much of the ground lost in last week's volatility. Specifically, futures for the Dow Jones Industrial Average edged up a mere 19 points. Meanwhile, futures for the S&P 500 and Nasdaq 100 stayed right around flat, hovering just below zero change. This calm followed a day of strong recoveries. The S&P 500 surged over 1%, its most significant single-day jump since May 27th, and it managed to recapture more than half of Friday's sharp downturn. The Dow, for its part, enjoyed its best performance since September 11th, snapping a 5-day skid and clawing back about two-thirds of those prior losses. What sparked this resurgence? Well, here's where it gets controversial. A single post on Truth Social from President Donald Trump appeared to dial down fears of escalating trade disputes with China. In his message on Sunday, Trump reassured followers, "Don't worry about China. It will all be fine." And just like that, the markets responded. Tech giants like Oracle, AMD, and Nvidia saw their shares rise broadly, propelling the broader market upward. The tech-dominated Nasdaq even climbed more than 2% for the session. But this is the part most people miss. Analysts are pointing out that trade policy is shaping U.S. markets like never before in 2024. Ulrika Hoffman-Burchardi, the global head of equities at UBS Global Wealth Management, highlighted in a recent note that last week brought a sharp spike in U.S.-China tensions. With both sides digging in, she predicts heightened market swings through the end of the month. Still, drawing from past Trump-Xi talks, she suggests that escalations often lead to short-term ceasefires, and issues like rare earth minerals or shipping costs could pave the way for an eventual agreement. It makes you wonder, doesn't it? Is a president's social media post really the key to calming global trade storms? Or is this just a temporary lull in a deeper conflict? Some might argue it's savvy diplomacy at work, while others could see it as risky over-reliance on unfiltered tweets. Either way, it's a reminder of how intertwined politics and markets truly are. Looking forward to Tuesday, investors are gearing up to build on this momentum. Key players like JPMorgan Chase and Goldman Sachs are slated to unveil their third-quarter earnings results, which could provide fresh insights into the financial health of major banks and set the tone for the week. As we wrap this up, let's chat. Do you think social media antics from world leaders should have such sway over stock prices? Or is this a sign of a more volatile future ahead? Agree or disagree? Drop your thoughts in the comments below. And hey, if you're new to investing, remember, these swings highlight why diversification and staying informed are your best bets in the unpredictable world of stocks.